Hello and welcome to CommBank View, Economics and Markets, unpacking the key issues each week with expert voices from among CommBank's economists and strategists. My name is Mandy Drury and I'm always delighted every week to be your host. Well, President Trump met with Chinese President Xi Jinping in Beijing this past week, his second state visit to China and the first US presidential visit to the country in nearly 9 years. President Xi was not wrong in declaring the whole world is watching our meeting. So, if it was so widely anticipated, what was achieved? Let's ask Madison Cartwright, CommBank Senior Geoeconomics Analyst. Madison, welcome to the show. Great to have you with us. You know, the White House has said that the summit secured historic trade deals with China. Were they historic or just enough to maintain a trade truce? And what impact will they have?
Thanks, Mandy. They certainly weren't historic. These were very smaller scale trade arrangements that were made on the margins of the broader trade picture between the United States and China. And this really, in our view, was about maintaining that trade truce, as you said, that was agreed to last October in preparation for future meetings that will take place later this year between President Xi and President Trump. So we now know that September will be the second date for the summit. But they will also meet around the edges of upcoming international meetings, APEC and the G20 as well later this year. So we expect more substantive agreements to be made then. But what was decided now, as I said, were on a much smaller scale. So we do know that 200 Boeing jets will be sold to China. They've agreed to buy that. They've also agreed to buy at least $17 billion worth of US agricultural output, particularly things like soybeans, and beef and poultry that have been subject to restrictions. We also have some movement on agreements to buy more US energy, particularly crude oil. So these are all products that the US currently exports to China. However, these are the ones that have been most heavily affected by the trade war and have come down the most in terms of bilateral exchange. And so these are the products that have been targeted. But beyond that, we haven't got much change in the trade relationship. And this was more about, as we say, maintaining goodwill in preparation for future negotiations.
Indeed, what about the more contentious and also economically consequential issues like semiconductors and rare earths?
Yeah, so these contentious issues weren't decided on. So at the moment, the big standoff between the two, other than this sort of escalating tariff dynamic that we had last year, are in these sort of key industries. So the nature of the trade war that we've seen between the United States and the trade competition and between China and the United States that we've seen, on the one hand, we have this sort of aggregate level, broad-based decoupling, which occurs through big measures like tariffs. And then we have these more industry-specific targeted de-risking style strategies that are targeted as strategic industries. Now, for the United States, they have put export controls on their technology, particularly around semiconductors, but not just semiconductors themselves, also manufacturing equipment and the intellectual property behind semiconductors to prevent China from being able to manufacture its own as well. On the Chinese side, we've seen the weaponization of rare earths and critical minerals. So these are areas where China dominates the global market and has done for quite some time. And these are very important in high-end manufacturing, particularly in renewable technology, but also in defense manufacturing. So in order to secure adequate supplies of these, the United States needs to go to China, as does much of the world. And China put export controls on these, which were paused as part of the trade truce that was negotiated last October. Now, these are due to expire. This pause is due to expire in November, and no agreement was made at this summit to extend that. And we expect that will come up in September when they meet again.
Talking of defence, it wasn't just trade that was on the table, there was also politics, right, Madison? And we saw President Xi make some pretty strong remarks on Taiwan and raised that issue as a potential trigger for conflict between China and the United States. Do these strong remarks suggest that China is considering an invasion of Taiwan?
So, if you were to hear these sort of remarks first for the first time in your life, right, and hear China talk about Taiwan being such a crucial element of their relationship and one that could push the United States and China to war if not handled appropriately, that may suggest that there's something brewing, and that's very strong language. But those who are used to hearing China talk about Taiwan, this is fairly standard dialogue that we've come to expect from them. The Chinese have been very clear for a very long time that from their perspective, Taiwan is part of China, and this is obviously the main source of the dispute, but they consider it a key territorial issue about their sovereignty, their integrity as a country. So it is a very important issue for them, and one they use these sorts of strong rhetoric to talk about quite often. So this is very, very typical. This is also for a very long time been the main sticking point, right, in the relationship between China and the United States. So this rhetoric was certainly strong, and it was a very clear reminder coming from President Xi that Taiwan remains the center of their bilateral relations with the United States. And certainly it seems that Xi was pushing for some type of softening of the US position on the issue of Taiwan. But it doesn't suggest an escalation in that rhetoric. It's fairly standard.
It certainly seems like the Trump administration, for their part, has made no public changes to their Taiwan policy or any declarations on the issue of Taiwan independence. And yet, I'm wondering, come that second summit in September, Madison, might a larger concession or an economic offer to buy US products come from China in return for Trump potentially sitting on his hands if indeed there was a China move on Taiwan?
So I certainly think that China's priority is to get movement on Taiwan. They seem to have made a play for that at this summit. I expect fully that they will do the same at the next summit. And what China is essentially trying to achieve through these engagements with Trump is that despite the trade disputes and the trade war that we had last year, Beijing actually does see Trump as somewhat as an opportunity to engage in negotiations where they seek to leverage short-term concessions for long-term concessions from the United States. So anything that causes doubt over US support for Taiwan would be a longer-term concession, because they will ultimately want to, in the minds of actors within the Asia-Pacific region, sow doubts that the United States can be relied upon. Certainly in Taipei as well. So they are seeking sort of softer language, and they were trying to get some maybe off-the-cuff remarks from Trump on the issue of, say, opposing Taiwanese independence, for example. Trump avoided that and steadfastly refused to answer questions on the issue of Taiwan. And Marco Rubio, the Secretary of State, came out after the summit and was very emphatic in saying that the US diplomatic position of Taiwan has not changed. So that wasn't a success for Beijing. But what has happened coming out of the summit is that Donald Trump is now considering whether or not to approve a sizable $14 billion arms sale to Taiwan. This was passed by Congress. It is subject to presidential approval. And he is actively considering whether or not to approve that. Another option available to him is to actually pare it down a bit and approve a smaller portion of the sale or certain types of equipment. Now, if he were to sort of pare that down, and certainly if he were to scuttle it completely, that would be the type of signal that Beijing is looking for, a weakening, a softening of the US position on Taiwan, something that could reasonably interpreted by actors within the region as something that undermines US credibility when it comes to ensuring security in the region. We'll have to wait and see what Trump does, but it seems from the comments that Trump has made about this that he does view the sale of armaments to Taiwan, which was discussed in the meeting, we know, as a bargaining chip essentially for the United States. And that does lean into, again, this sort of transactional way that Trump likes to engage in foreign policy. And this transactional approach to foreign policy is certainly something that Chinese officials have sought to leverage in their negotiations. So if we do see some movement on that issue, I think that would be setting the groundwork for another agreement come September, but we'll ultimately just have to wait and see what happens there.
Indeed, as you say, any reduction of the sale size of those arms, or as you say, also a complete scuttling of the deal, would be seen as a victory for Beijing. But of course, everyone wants something, don't they? And while China would have liked some movement on Taiwan from Trump, Trump would have liked some movement on Iran from China, and President Trump is claiming that President Xi agreed with the US position on the war in Iran. But as far as I can see, Madison, China has not visibly changed its position. Can we expect China to help find a solution to the Iran conflict?
No, I don't think we can. I think that China has two different competing thinking on the issue of Iran. On the one hand, they are dealing with the economic fallout from the war. And while they're better placed than many other economies to deal with this, it is something they do need to reckon with, and they are experiencing these costs. But on the other hand, this is a big geopolitical boon for them. The United States has been drawn out of the Asia-Pacific region. It's being drawn further into the Gulf. We've seen redeployment of armaments and ships and personnel and all of this out of the region. So the United States is in a much weakened position in Asia than it was prior to the war, and that ultimately benefits geopolitically China. So they're trying to manage these competing goals. Now, when Trump says there was agreement on the issue of Iran, I think in a very banal sense that's true. In that China official public stance is that they want an end to the conflict. They want to maintain international law and norms around issues such as freedom of navigation, for example, and that would extend to the Strait of Hormuz. Yes, they want the Strait of Hormuz open. Yes, they want it demilitarized. This is a public position they've had for quite some time. It's very typical of China's approach to foreign policy, which is usually to appeal to international law and the primacy of the United Nations. And that's what they've done consistently in this conflict. And that is essentially what they would, that's what they were sort of reiterating, it seems, in this meeting. Also on the issue of nuclear weapons, Trump said that China agrees that Iran should not have nuclear weapons. Again, China's position is that we have a non-proliferation treaty, for example. This is an international law, and this covers issues like whether or not countries should have nuclear weapons, right? And so this is not a huge movement. It wasn't a movement at all from China's position publicly. They released a statement, that is to say China released a statement through their Ministry of Foreign Affairs that laid out China's position on Iran following the meeting with Trump, and it was exactly what it had been prior to it. So there hasn't been any movement on that. Ultimately, China will play a positive role in negotiations, and this is what they'll seek to do. They have been engaging in back-channel talks with the Iranians, it seems, and with Pakistan in order to facilitate. Trump raised after the meeting that perhaps China could take the nuclear-enriched uranium that's in Iran. This is something that we have raised before as a possibility for China's role in this. So China will continue to try and play a positive role in negotiations. It manage its relationship with the Gulf states, with Israel, with the United States and Iran. It is in a good position to do that. But it's not going to come to the rescue, and it's not going to solve this problem for the United States.
So then the question becomes, if the US can't count on China's support beyond that, Madison, how does the conflict end?
Yeah, so the ceasefire is now entering its second month, and obviously this has been going on for quite some time. We do not believe that the ceasefire is sustainable. Ultimately, it's the dynamics sort of underpinning it will cause instability, and it will eventually make the ceasefire collapse. And either that will result in some sort of deal, which is what we think is marginally the most likely outcome at this stage. Which will bring the United States and Iran to the table in a compromise agreement. We have seen some movement. So the latest proposal from Iran seems to show some sort of movement towards the US position. So I am hopeful that we are seeing progress here, but the problem is the progress is very slow, and ultimately the agreement can only be reached if the United States makes some sort of concessions to Iran. It has been unable through military means to get a unconditional surrender from Iran, and ultimately what this means is that the United States has to give up something. Now, the United States has shown, it's not willing to do that quite yet. But as soon as the United States does show some flexibility on key issues, particularly around the highly enriched uranium, we do think there can be progress towards a deal. In the meantime, however, the longer the ceasefire goes without a resolution, the more likely it becomes that it ultimately collapses, because both sides are sort of losing patience with their process, and they're trying to do things to increase their leverage in negotiations. And this includes, for example, Donald Trump's short-lived effort through Project Freedom to force the Strait of Hormuz open, which almost caused the collapse of the ceasefire and did result in Iranian attacks on the UAE. So this type of escalation that's trying to keep escalating within the ceasefire, but ultimately risks the ceasefire is going to become more common. And we have seen recently the United States was considering, or Donald Trump was personally considering efforts to re-engage in hostilities. But ultimately, this would be, again, to compel some type of concessions on Iran. So ultimately, a deal needs to be made, and we're hopeful that that can happen without a renewal of hostilities, because if the ceasefire collapses, we do expect it to be much more difficult to negotiate a new ceasefire, just because it will undermine trust even more between the parties. And we think that the risk of significant damage in the region from Iranian retaliation will be heightened this time around.
Does Iran need to make concessions, though, or can it just sit tight? And you were saying that thus far the US has been loath to make concessions itself, instead preferring threats of further escalation. But if indeed, finally, at the end of the day, the US is forced into making concessions to get a deal done, what kind of concessions would it have to make?
So I think Iran is willing to make concessions. Iranian negotiators have historically been very pragmatic, and the appetite for that has decreased somewhat with the war. But we have seen them move on the issue, for example, of nuclear enrichment, right? So that they are beginning to talk about a suspension on enrichment. They're not framing it in that way. They're framing it around a needs-based model, but that's really just for their purposes. Ultimately, they are agreeing to some sort of suspension in practical sense, right, of enriched nuclear material. So we have seen movement from them. From the United States, I think they need to realize that Iran is much stronger than perhaps the United States judged them to be going into this conflict, and that Iran ultimately wants an end to 47 years worth of hostilities between them and the West broadly defined. So there's been this big question mark over the region about what the balance of power in the region is going to be, and specifically what role Iran is going to play in that balance of power. And so debates over, what Iran can and can't do, what can it have nuclear enrichment, can it have a ballistic missile program, are we going to put sanctions on them in order to get this? They want those debates settled once and for all. And ultimately that means some type of guarantee that they won't be attacked in the future in order to settle this question, right? And that's what they want. So ultimately, the United States will need to come to a deal that provides probably sanction relief to Iran, probably a non-aggression pact of some kind with international guarantors. Iran has sort of raised the idea of going through the UN Security Council, for example. Mm-hmm. The Strait is going to have to be on the table. I don't want to make any predictions about what will happen there, but Iran, it would be very reticent to give that up, considering that's what's protected them in all of this, right? The US is going to have to live with Iranian ballistic missile program. That's certainly something they're not going to give up. But on the issue of nuclear weapons, nuclear enrichment, Iran can certainly guarantee no nuclear weapons. When it comes to the issue of nuclear enrichment, the United States will probably have to concede that Iran has a right to enrich nuclear material at some level, but subject to international monitoring and guarantees, which the Iranians would be willing to accept and have accepted in the past. This really seems to be the sticking point, that the United States is coming with a zero tolerance approach to nuclear enrichment, and that really needs to be eased because the Iranians are not wanting to give up what they see as a sovereign right.
So, Madison, to wrap up with you before we move on to Joe Capurso, we were framing this conversation around what was achieved at the summit between President Xi and President Trump in Beijing. Would you say that, bottom line, given that as recently as 2024, President Trump was saying that China was, quote, killing the US as a country, do you feel that this summit marked a much more conciliatory shift in tone for the United States and a throwing aside of the adversarial approach?
I think that broadly speaking, the structural dynamic has not changed, and we will see ebbs and flows in the US-China relations. But ultimately, we're moving towards a more competitive, strategically competitive environment. That's just a product that China is a rising power. One that is growing more powerful in its region and globally. And inevitably, the United States, as the incumbent great power of the world, is going to have to face that. So these are the broader structural forces that are driving this relationship, and this will continue in our view, right? This is going to set the conditions of their relationship. I think what the experiences from last year showed, however, is that both countries are heavily integrated with one another, and they just want to put the nature of this competitive relationship, which kind of needs to persist, right? But they want to put this on sort of more stable foundations, and minimize the damage that can be done to their economies and their relationship with other countries while they manage this competitive cycle. So we did see a lot more conciliatory language come out, and particularly from the Chinese side, the sort of emphasis on stability. And I think both have a genuine interest in this, but this doesn't necessarily mean that that the relations will kind of go back to what they were, say, prior to like 2015. I think it's important to remember, we can think about the Cold War relationship between the United States and the Soviet Union. China and US relations are very different in many ways, but we can think that in the 1970s, for example, we did have a détente between these two powers, and this was led by Kissinger, who certainly was okay, let's say, using more aggressive means in foreign policy, but understood at that time specifically it was in the United States' best interest to have a détente with the Soviet Union. So we can see these ebbs and flows in the relationship, but the broader structural dynamics are still there.
Well, China, the world's second largest economy, is certainly giving the US a run for its money, isn't it? Thank you so much. It's been a really interesting conversation. Thank you very much, Madison Cartwright.
Thank you.
Let's now bring into the conversation Joe Capurso, Head of Forex, International and Geoeconomics. Joe, welcome to this podcast. One outcome from the Trump-Xi summit is that the Strait of Hormuz is still closed. What impact is this now still having on the world economy?
Well, you might be surprised to hear that so far, in the major economies under our coverage, the economic impact has actually been pretty small. When we look at the, say, for example, the retail trade data for the major economies in March and April, you don't see a big negative impact just yet. So that is a good sign that the world economy, going into the energy shock, was in a solid position. Now, the reason that the major world economies have been able to absorb this shock well so far is because of a very large inventory drawdown of their oil and petroleum product supplies. That's been really important buffer in the last few months. But of course, those buffers can only last so long. And so we would expect to see a greater negative impact over the next few months if the Strait of Hormuz does not reopen soon. Now, this has been a very large shock, so who is wearing it if it's not the major foreign economies? It's basically the economies in South Asia, Latin America and Africa. They came into the crisis with low inventories, and their ability to compete in global markets at a much higher price is certainly impaired. So there's definitely weakness in the world economy. It's just not the major industrial economies in China that have been hit hardest yet.
Even if the impact hasn't necessarily been felt on growth yet, because of course there is a lag with that, is the most immediate transmission mechanism from the closure of the Strait of Hormuz, Joe, through inflationary pressures, which of course then trickles through to the inability for central banks to be able to have any wiggle room in cutting interest rates.
Yeah, and you certainly see that in economies like Australia that had elevated inflation going into the energy shock. And of course, the Middle East crisis just made it that much worse. So we think that central banks in places like the United States, the Eurozone and the UK, they are going to hike interest rates before the end of the year. Europe will probably start in June, the UK either in June or a little afterwards. The problem is that these economies were in solid shape going into the crisis. So high oil prices immediately go through to high petrol prices. You've seen some spillover to other prices such as airfares. But if you see spillovers to higher prices in other goods and services, that's really going to worry central banks. That is called second round impacts, and central banks will tighten in response to second round impacts.
Joe, getting back to China, the monthly Chinese data for April was released on Monday. What does it tell us then about the state of the Chinese economy 2 months into the war?
What it does tell us is that the characterisation of a two-speed economy is still intact. So we're still seeing weakness in domestic demand and strength in industrial production and exports. In terms of the weak parts, consumer spending was really, really weak. It barely grew in the 12 months to April. Now, the consumer in China has been very weak because of low consumer confidence following the botched reopening from the COVID lockdowns. So it's been weak for a long time. Making it worse has been the ongoing property problems of declining house prices. And of course, you've got very weak population growth in China as well. So that explains why the Chinese consumer has been weak for several years now. And it's not because of the energy price shock, because retail petrol prices in China are controlled by the government. The other weak spot of the Chinese economy has been investment. And that is very important to Australia because investment is very metal intensive. You need coal and iron ore to make steel. And of course, the weakest part of Chinese investment has been infrastructure spending. And that is by far and away the most metal intensive part of investment in China. It actually fell 9% in April, following a 5% fall in March. So this is certainly a big problem both for the Chinese economy, but also with follow-on impacts onto the Australian economy via commodity prices.
Joe, do you think the Chinese authorities are going to have to step in with fiscal stimulus?
I think there's a reasonable chance that they will have to step in with some sort of budget stimulus, but it's worth just pointing out that the authorities for a number of years now have been reluctant to release a big budget bazooka like they did during the GFC. During the GFC, the stimulus was far too big. It led to massive inflation. The Chinese authorities are much more focused on their competition with the United States in high tech and in military, rather than in maximising Chinese economic growth. And that's because they know that the Chinese economic growth potential is falling over time because of the oversupply of property and because of very weak Chinese population growth. So they've certainly changed over the years. What their main focus on is much more about competition with the United States government. On monetary policy, you will probably get some easing this year, but we're talking very small cuts to the policy interest rate of 10 basis points and perhaps another 25 or 50 basis point cut in the reserve requirement ratio. In terms of fiscal policy, it's probably going to be very targeted and temporary measures to support consumer spending. But all that does is bring forward spending rather than lead to a sustainable economic cycle.
But am I right in thinking, Joe, that whatever the fiscal forces are, whatever the PBOC, the central bank in China, does for the short-term challenges in the economy, there are a number of embedded long-term structural challenges that the Chinese economy is facing? What do you see those challenges as being, and will that keep a lid on strong growth going forward?
Yes, and the Chinese authorities certainly acknowledge that potential economic growth is declining over time. We think that economic growth potential is something like 4.5% to 5%, but by the end of the decade it would be closer to 3.5% to 4%. So some of the big structural headwinds facing the Chinese economy are a shrinking population. For example, the population fell by 3.5 million people in 2025. And by next decade, which isn't very far away, China's population is going to fall by 10 million people per decade, 10 million people per year for the rest of the century. So that is going to be very hard to grow your economy when your population is falling by so much every year. Other headwinds on economic growth are the property overhang. That has undermined the stability of the banking system. So the Chinese authorities are continually recapitalising some of the large banks and winding down some of the large property developers. They simply built too much for the population and for incomes. And so home building has been declining for 4 years straight now. So that's going to take a long time to work out. And the final issue there is debt. Very high local government debt, very high corporate debt, particularly amongst property companies in China, is certainly a headwind to future economic growth. Now, one of the best things going for the Chinese economy, of course, is that it's moving up the value-added ladder. So it's moving up from low value-added industries to high value-added industries. It dominates green tech, for example, and it dominates increasingly AI tech as well. So there is a lot of good things going for the Chinese economy, but the headwinds are very, very significant, which is why over the long run, Chinese economic growth is going to slow down gradually year after year.
Excellent stuff. Thank you so much for joining us today, Joe. And we were speaking with Madison before that. Before we go, let's take a look at the week ahead with Michael Tang, Senior Associate to Market Strategy and Rates Research. Michael, thank you so much for joining us on the podcast. It did seem like the conflict in Iran over the past week was on the sidelines as we had a lot of other things to focus on.
Yeah, that's right, Mandy. It's good to be here. As you said, the conflict last week did feel like it was in the background a little bit more, and a lot of the focus was on that US-China summit in Beijing, which Madison has spoken at length quite a bit about. But obviously, I think there's a chance it will re-emerge again this week after some of the optimism around results coming out of that summit around the Strait of Hormuz failed to yield much tangible progress. The pressure on oil prices over the past 2.5 months has also unsurprisingly begun to show more apparently in the official data as well. So last week we did see US CPI slightly above expectations last week, but it was actually the less looked at PPI in both US and Japan, which were substantially above consensus. So PPI measures prices for producers or sort of prices at the wholesale level, but it's important because it can sometimes be a bit of a leading indicator for prices that consumers face down the line as well.
It's always important to watch, isn't it? But on that note, we've also got CPI out this week from the UK and Japan.
Yeah, yes, indeed. So that will be a bit of a guide on how that global inflation story is tracking after some of those PPI reads last week. Of course, in Australia as well, we have CPI not this week, but next Wednesday, which equally will give a sense of how that inflation story is evolving locally as well. So importantly, I think a lot of that shift in that inflation and oil story since the beginning of the conflict is feeding into how financial markets and the like are thinking about the monetary policy response as well. So at least in Australia, we've had 3 hikes already since the beginning of the year, while our offshore peers that we mentioned earlier are also accelerating the process of hikes as well. But for now, staying in Australia, April jobs is also out tomorrow. We expect jobs growth of 15,000 and an unchanged participation rate of 66.8% based on our own internal data for a steady unemployment rate of 4.3%. And so that'll be quite an important data point for the RBA.
And always very important to watch the actual makeup of it as well, whether or not it's casual hiring versus long-term or permanent hiring. What about the bond sell-off last week? Should we still be watching the bond market on the back of that?
Yeah, absolutely. And I think that the sort of bond market sell-off you've mentioned is a reflection of a lot of those themes I've mentioned in the last couple of minutes as well. So we had a pretty dismal reaction in bond markets last Friday. So bond yields were sharply higher across a number of jurisdictions. And I think that is basically that sort of oil feeding through into inflation, feeding through into central bank expectations. It's that sort of thread playing through as well. Of note as well, there was sort of another leg to the sort of bond market reaction as well, and that came from the UK as well. There's obviously a lot of headlines around UK PM Keir Starmer and sort of how tenuous his position is at the moment. And a lot of that bond market reaction, particularly in the UK bond market, or sort of gilts as they're known, is a bit of a vote on the fiscal credibility of some of these potential candidates for the premiership as well. And I think, it feeds into this broader idea around fiscal policy. That's always been a bit of a slower moving beast. For many years, it's sort of been in the background a little bit. But over the last couple of years, it's certainly reared its head a little bit more. It's caused a little bit of political instability in a lot of places. And in some respects, has also sort of even changed leaderships as well. So we've seen a big lift in debt in the US, the UK, Japan, Germany, and France as a few examples. But I think, by that comparison, I think Australia has done pretty well. And you'll sort of hear some of those thoughts from our federal budget podcast last week as well.
Well, a number of these themes, they all come to a head next week when the New Zealand Central Bank meets.
Yeah, exactly. I think there's a lot of that playing through in New Zealand at the moment as well. They're obviously not immune. So the RBNZ is meeting next Wednesday. There's no hike expected just yet. But it is that similar story of hikes being pulled forward as well. So there is some chatter about hikes coming potentially, around July, August. And before that, it was sort of, more like December for first hike. And so I think New Zealand is that very interesting study in growth and inflation pulling in opposite directions. Some of the more timely indicators show that activity in New Zealand is actually still quite fragile, despite above target inflation. And so I think the RBNZ's guidance will be one to watch as an example of how central banks think through some of these economic trade-offs arising from Iran as well. The New Zealand budget is actually also out next Thursday as well. And, again, it's that fiscal angle. It is a general election year for New Zealand as well. The incumbent Nationals are actually behind in the polls at the moment. So we will actually end up seeing how much that fiscal side coordinates with the monetary side in that inflation fight in New Zealand as well.
Wonderful. Well, thank you so much, Michael Tang, for giving us the look ahead for this coming week.
Thank you.
And on that note, thank you so much for joining us today. Make sure that you do follow CommBank View every week for your analysis on what is moving and shifting and influencing economies and markets. It's been my pleasure to be your podcast host for today. My name is Mandy Drury.